Hey everyone, this is Logan Hertz with Hazeltine LLC. We're continuing our interview series with other financial professionals, and today we're talking a bit more about real estate. I found that infinite banking and velocity banking finds a very receptive audience among real estate investors for a lot of very good reasons. They just seem to get it. So, along those veins, we have with us today John Rubino. John, how are you doing?
I'm great, Logan. Thanks for having me today. I was looking forward to this. It'll be a great time.
All right. So, John, you've got a ton of experience in real estate. Why don't you start with just giving us your backstory and your why? Why real estate? Why do you do what you do?
Yeah, it's great. So, born and raised in Brooklyn, New York. Joined the Navy back in 1997, a long time ago. I was active duty Navy naval aviator, flew P-3 Orions. This big plane above my head here. Served for 20 years. Did some overseas tours to Italy, some time down in Texas, most of the country here, which was a lot of fun. I met my bride 22 years ago. We've got 4 kids, and I retired out of active duty service back in 2017 after a 20-year career. I was stationed right outside the Pentagon, working for the Navy headquarters staff. And when I got back to DC back in 2011, 2012, I knew that my time in the Navy was getting ready to be over for that chapter. I'm starting a new one, and I really was interested in starting a business. I have an entrepreneurial spirit and blood in my veins from my dad, who is a business owner, former Marine, my mom, who was a school teacher, but also owned her own business. I had 7 uncles and 5 aunts who are all business owners. So I guess you could say it was in my blood. And at about, oh gosh, back 2004, 2005, if we go back a bit further, I got into real estate really just through a really good friend of mine that I invest with now, who taught me a lot, gave me that bug to get me going. And we started to do some active investments where we built a couple of new construction homes with some local area builders. And I had a lot of success with that. And at the time being stationed where I was at in Southern Maryland. And I did really well. I made some nice profits, and I decided to invest that money with a few friends who were in real estate, who were buying property, fix and flips, condominium conversions. And so for about a 7-year period, I was getting a 10% return on my money. And I was also getting a fantastic education and learning how to invest passively, being the guy on the sidelines, but bringing in the money that's needed for these projects. So that was an amazing experience. So now come back to 2012, 2013, and I'm getting ready to retire. I sat down with some really close people inside my network, my tribe, and I passed this idea of saying, I've been investing for 7 years passively. I would love to take that kind of system that I've learned and what I've gotten out of it and grown with as far as both wealth and an understanding of this passion I had. I'd love to introduce this to my friends and family, the guys I flew with in the Navy, the people that I could bring together where we can pool money and bring money into larger types of investments. So I got with my CPA at the time, who was wicked smart, had about 30 years of business experience, had his own accounting firm with 2 offices down in Hilton Head, South Carolina. And he became our CFO, which is awesome because he does a lot of the tax returns and all the financials. And I'm the face of the business. I go out and find people to work with and different opportunities to bring in. So we launched the business back in April of 2013. We started on letting borrowers come to us for private loans, excuse me, where we would fall on a single family renovation, about 80% of that, and usually split the profits 60-40 in our favor. And that went really well. But then we graduated to where we knew we would be, which is in the equity market, where we could bring in, anywhere from $1 million to $5 million of equity to large scale projects, multifamily, 300 unit multifamily properties that were being constructed from the ground up, existing properties, condominiums, land development. So we were able to put together a really neat business, and we started to grow on the investor side, mainly organically at first. But fast forward to today, and we've got about 250 to 300 investors in the company that we can go out to raise funds on a given project. So our business is twofold. We work with sponsors, developers, operators, and business owners that are in need of capital to basically build or develop their real estate projects. And again, in that asset class of multifamily, industrial, student housing, senior assisted living, condo, And we vet those businesses through a due diligence process. We get them on board and they come on board as a partnered business that we work with. And then they basically are sending over their deals for us to review to potentially invest on. And once we go through our process of going through the due diligence on their projects, we then bring them to our investors. And my goal is to try to bring that project or those projects to my investors on a silver platter with a lot of that initial work done because my investors are high income earners, retired, or they have businesses. So they've got that 8 to 5 or 9 to 5 job where they're managing their business. And so they don't have the time to do all the work we do. In essence, we're the conduit or the liaison between the investors that decide to invest with us of that 300 on any given project and the sponsors and the partners that are bringing us these deals. In our position, we are usually about 5 to 10% of the overall sourcing or funding for the project. And you may think to yourself, oh, that should be easy to get, right? They should be able to raise that money pretty easily as a sponsor. Believe it or not, it's actually the hardest amount of capital to get because banks are going to usually bring in about 50 to 60% of the money that's needed in the form of a leveraged construction loan or a loan. Then you'll get an institutional group of equity that'll come in around 20 to 30%. So that last 10%, 5, 10%'s got to come from the sponsor in the form of either private investment through his business or her business, through their executives to bring in that capital that's needed to make that capital stack whole so that they have all the funds they need to execute a project. So that's a lot I've shared. I know that there's probably questions and maybe things we could chat about on that, but that's our business model. We've been in business for over 13 years, 12, 13 years. We've invested on 31 projects with 18 of going full cycle. And we've invested a little over $40 million with realized profit on the 18 that we've had of about maybe 7 or 8 million.
So let's back up 10,000 foot view.
Mhm.
Why real estate? Right. Because I knew friend of mine in business, he did a lot of studies on self-made millionaires, right? And what he
Right.
found was that generally speaking, they invested in two things: businesses and real estate. And there can be overlap there, right? Because you could start a real estate related business. That's kind of what you did.
Of course.
They didn't become millionaires by buying mutual funds and putting money in a retirement account or anything like that. So why real estate?
I've always been intrigued by it ever since I learned about it almost 20 years ago. It's exciting watching that first house being built, watching the transactional side, see what on a primary residence we put into a home. I've owned 4 homes as primary residence and just seeing us being able to increase the value, increase the quality of life of living in a primary resident and be able to do that for folks that need housing, folks that need a place to live, especially now. It's so difficult to find affordable housing. So there's kind of an impact or an impact type kind of view I see that I'm helping a community and bringing value to a community. So that's one big one. And real estate, like you said, is been historically one of the greatest areas of growth in our nation. People always need a place to live. Jobs are going to be created in different markets that just don't have the supply that's needed. So there's a lot of opportunity. And then just from my learning of it over that 7 year period, and then some about how it's been and being a business owner doing it for the last 13 years has been really exciting. And I've got a passion for it. And one of the questions you asked is, what's my why? Why do I do it? I love relationships. When I was making money those 7 years, one of the things I thought was this is going to help people have an opportunity to come in and invest on a $100 million project at a 25 to $50,000 level, have ownership, be a part of it, see it being a piece of dirt, and then 3 years later, this beautiful building that people are living in. That just is so exciting. And I've got a little domino on my desk and I write on it relationships. So if you could see that, but that's who I am. I love connecting people just like you, Logan. I know we know each other a short time. We love connecting people. We love helping people.
Let me just say, I am the most introverted person that I know.
You are, but
It's
yeah, you're
fantastic.
still fantastic with the people in your network. And that's important,
Thank you.
right?
Thank
Because it does lead to business opportunities, but it also leads to the potential of growing friendships, growing in your faith, growing in things that you can do together when you meet new and exciting people. Look at it as a gift.
Yeah, let's talk about a couple of strategies that I do that are somewhat related to real estate. So, infinite banking and velocity banking. So, velocity banking is typically using a HELOC. You could, if you're a real estate investor, and running your cash flow through this HELOC, which for those who don't know, HELOC is a home equity line of credit. It's an open ended two-way street where you can put money in and pull money out. So if you have some kind of real estate investment property, you can do a first lien HELOC on it, right? Have access to that equity on a very flexible basis. And then infinite banking, which does a similar thing, but using cash value life insurance, right? And so I think the reason why real estate investors, why it resonates with them is because there's an analogy between what we're doing with, let's say, cash value life insurance and what you might do in real estate, where
Yeah.
in real estate, right, you're paying money into a property. Maybe you have a mortgage on that property and you're paying money into it. But as you're paying down that mortgage, your equity in the house is growing, right? Meanwhile, you're collecting rental income, you're benefiting from capital appreciation. And once you've built up equity in that property and you want to use the equity, you're not going to sell the property. I mean, you could, but then you just get a one-time payout and you now probably have to pay taxes on those gains,
Mhm.
right? So
Mhm.
instead, you're going to leverage the property. You're going to borrow against it strategically, right? So you unlock the equity. Meanwhile, you still collect that rental income. You still benefit from capital appreciation and you pay no taxes because you didn't realize it,
Mhm.
right?
Right.
We're doing a similar thing with cash value life insurance. First of all, you can use cash value life insurance as a financing tool to purchase to finance your investments, your real estate investments, something that a lot of real estate investors do because it gives you a lot more control over the financing aspect rather than having to
Yeah.
ask permission. And you add another profit center. So now you're
Mhm.
making money in the property itself and you're making money as the private bank finance, right? But
Correct.
with cash value life insurance, you're paying premiums into your policy, right? That gives you a death benefit. God forbid something happens to you. And then as you pay premiums, you're building equity inside your policy. That equity we call cash value. When you want to use that equity, you're not going to surrender the policy. You're going to borrow against the policy using what's called a policy loan. So now you use that equity. Meanwhile, the full principal balance keeps earning for you inside the policy because you didn't withdraw any. You pay no taxes on those gains because it's inside of a life insurance policy. And you didn't realize a gain, you just borrowed.
Yeah, it's exciting. And we've got I've got family of six. We all have that cash value policy. So it's hugely beneficial, like you laid it out. From a real estate perspective, whether you're going to be an active purchaser of property and do what you just laid out very nicely, or more in my world where you want to have a passive role where you're more of what's called a limited partner, where you don't have all the ins and outs in the day to day dealing with the tenants or the contractors or the sales team. You're really just an investor. And it takes a lot of that headaches and risk out from that end. Of course, you giving up significant control and calling the shots, but that's just part of what we focus on. And with a cash value policy, I always tell folks that's just another bucket of money that you have available that you could use to invest in real estate or in any type of alternative investment that you can have access to. And that's very important because a lot of times people are cash poor or they've got a lot of assets. And this provides an opportunity for them to find a nice reservoir of capital to invest, which is huge. And another one I tell folks a lot about, and it's another big one, is like a self-directed IRA. Why not take your Roth or your 401k and you can transfer a portion of that or convert a portion of that into a self-directed IRA, and you can use that to invest. A lot of people have significant amounts of capital. So that's another one you can use. But yeah, I think infinite banking, if you laid out cash value policies, like you said, are so important because it takes the opportunity and it aligns it with another stream of available capital that you can use.
Right. So there are two ways I can talk about it. And so we talk about velocity banking and infinite banking. The question I would ask to real estate investors is where are you storing your liquidity and how are you leveraging that liquidity? So I think most real estate investors understand the power of HELOCs and how they can be great
Mm.
tools. They probably are not aware that you can do a first lien HELOC. You can actually buy a property with a HELOC, right? Don't even use a mortgage You don't have to use other more conventional financing. You can actually have a first lien HELOC on your investment properties, right? So all that equity is always available to you and you can pay it in, pull it out, pay it in, pull it out, right?
Yeah.
Street. So it's kind of like a burr strategy, but without the need to refinance, right?
Right.
Right? Just a two-way street. Whole life
Yeah.
insurance is similar, right? Where are you storing and leveraging your liquidity? You're storing it in a place where you're getting a nice guaranteed tax-free return. There's no downside risk. There's no market risk. Okay. It's guaranteed to go up every single year. Okay. So it keeps earning for you while you're using it. Right. So unlike a standard savings account where when you withdraw money, it stops earning for you. Here, when you use that money, it keeps earning for you because you didn't withdraw anything. You just strategically borrowed against it. And it's important to point out that when you borrow against your whole life policy, you are not taking on debt. A policy loan is not a debt. It is a contractually guaranteed right that you have from the insurance company. You're now using the insurance company's money, not yours. Meanwhile, your full policy keeps earning and you decide if, when, and how you want to pay back that policy loan. It's totally up to you. This is what we
Yeah.
mean when we say you become your own banker. You took out a loan to yourself and you decide what the repayment terms are going to be. The reason
Yeah.
why this works is because remember, on that insurance policy, there is a death, right? So the loan is secured by that death benefit. If you take out a loan and never pay it back, all that happens is that death benefit pays off the loan. And the death benefit keeps rising because you're being paid dividends this whole time. So the collateral is always good. Okay. The other thing, when I was talking with a real estate investor earlier today who is doing infinite banking, and he said he would describe infinite banking or cash value life insurance as a bridge. It's a bridge to where you want to go, right? So if you take out, let's say you say, you know what, I want to be worth $5 million. I'd like to be worth 5. Okay. Well, if you take out a cash value life insurance policy with a $5 million death benefit, you now have a bridge to 5 million. You just started a self-completing plan to save up $5 million worth of capital, and it will happen at some point. If
Mhm.
you start saving up and then you die, that death benefit pays out, your plan is completed, right? Or
Mhm.
it'll happen while you're alive because dividends interest eventually compound to the point where you now have $5 million liquid and that death benefit is now maybe $7 million, right?
Exactly.
So cash
Yeah.
value life insurance is a plan with a guaranteed result.
Exactly. And that word guarantee is something I never use in real estate. So yes, you're right. You're right. And there's so many other benefits we could probably spend so much time on. The benefits of those types of policies. It's just amazing. But I think that one of the big things I hear when I take off my business owner's hat and I put on my investor's hat and I listen to that, I hear, hey, I've got a goal of X. I can get there with this and I can control a lot of it. I can use it for where I need to use it. And this is another big one because the three typical investors I hear from hey, I want to make more money, passive income or replace my income from my W-2 1099. Hey, I want to make more money for retirement, right? Or hey, I don't want to pay Uncle Sam more taxes. Those are usually the three types of investors I hear. So with this mechanism and this kind of system that you've laid out, you're kind of doing all three if you think about it. And the big one to me is the tax, right? Because there's not a lot of things you could invest in outside of a Roth IRA, and that's got caps. So cash value insurance is just so huge on what you can put in and what you can use and how it can grow. And yeah, it just makes all the sense in the world.
Yeah. So tell me a little bit about, I know you've got other ventures. I don't know if you mentioned United. You
Yeah.
want to talk a little bit about that?
Yeah. So my 80 to 85% of the day is spent on JID Investments, my capital raising business. And again, we're growing with investors, we're growing with projects that the last couple of years have been obviously a challenge with COVID and then rolling into the challenges with inflation and the high interest rate environment. But we're still navigating through it nicely. And we still anticipate very good returns for our investors. About a year ago, I was invited by a friend of mine who's a broker at a local Keller Williams brokerage here in Northern Virginia. And they asked me, hey, we want to bring you on to be a coach, a consultant, to a bunch of our agents in the office. And I said, that sounds great. I'd love to do that. 3 months after that it became, hey, why don't we stand up a program where we can offer our and agents in the office an opportunity to have like this systematic approach where it's education, understanding at the fundamental, and then at the kind of the applying skills level, the more advanced on different topics. And then we can graduate from the education into a mastermind group where we actually come together and we look at deals together. We do a lot of the things I do as a capital raiser on the analysis and the underwriting side to give the agents an opportunity to invest, grow their wealth, be among trusted partners in the group. The group has a financial advisor, an insurance advisor. We have a registered investment advisor, an estate planning and trust advisor, a CPA. So we've got that team. I think I mentioned to you before when we talked previously, I'm a big fan of Robert Kiyosaki, not to endorse him, but he's just a brilliant mind that just talks about how you put that team together. So this program really was designed mainly for the agents, but we've actually opened it up now to a lot of folks that are interested in learning more about how to invest, how to grow their wealth, how to be a part of a membership group that they can trust, they can learn from. And again, going back to what my passion is, my why is I want to help people. I've learned something. I want to share that with others. So we've grown really nicely. We've got a good number of folks. We have different types of workshops we do each month. We're going to take a site visit and field trip out to a few projects I have in Washington, D.C. next week. We do a networking for wealth group that comes together as part of the KW United Wealth Program. We sit down and we just talk about certain topics like interest rate cuts and what we can jump on as far as getting a knee up. So yeah, it's a fantastic group. We're having a ton of fun, and I think it's just going to continue to grow. I think that the opportunities of seeing this expand regionally and nationally is quite possible with what we're doing to take what we're doing and bringing it out to different brokerages and real estate offices that could use this as a mechanism to grow wealth, but doing it where wealth is not the center, right? The foundation is built on a trusted group of people that can work together, have fun, grow their wealth, but at the end of the day, hit that level 4 or 5 of that Maslow's hierarchy of needs, which is very hard to do.
So you touched on earlier, but getting back to your primary venture, what sort of investors are you typically looking for? Who does your program work for, and what are the main benefits? Is it tax savings? Is it cash flow? Is it just passive?
Yeah,
What kind of
that's a great question. So the investors we spend most of our time with are, it's really outlined and governed by the SEC, Securities and Exchange Commission. We've got to work with an accredited investor. An accredited investor is someone that makes $200,000 of adjusted gross income over the last 2 tax cycles, 300,000 if they're filing jointly, or they have $1 million of net worth, not including their primary residence. If they meet either of those as an individual, they're in.
by the
They're
way,
accredited.
you can also an easier way to do it if you want is you can also get your Series 65 license. That
There you
also
go. That does. So there is other ways, and that's changed. You're right. If you want to come in as an entity or you have a trust, there are caveats, but the typical one is the one I laid out, the two I laid out there. Either one of those you're in. But yeah, business owners that want to utilize a portion of their discretionary income, or capital, or savings, folks that want to grow their IRAs outside the traditional means, business owners and high income earners. Those are the types of folks we're looking to talk to. And again, like you'd laid out initially, there's going to be the basics that you want to maximize, right? The IRAs, the cash value insurance, the different things that you can do to start. And then as you start moving along that path, this is definitely something I think folks would have interest in. And to expand on it, alternative investments is just skyrocketing. People are doing things like investing in major league sports. They're investing as owners inside of a pro baseball team, or they're investing in different types of currencies or gas and energy. So alternative investments is definitely a wide spectrum of different things. I focus primarily on passive investments. I post.
That's a good way of putting it, yeah. So when you're evaluating deals, how are you typically finding them and how do you evaluate which ones you're gonna move forward on?
Yeah, the nice part about what I've been doing is I've grown a good network of folks that I've got more deals than I can handle right now. And so what we typically like to do, our sweet spot is focused on really development and new construction type product for a few reasons. One is the yields are a lot higher. If you're coming in on a development project of entitled land and you're going to walk it through from developing the land to building on it to leasing or selling, it's about a 3 to 5 year process. So it's definitely a longer timeline, which presents some pros and cons. The best part about that is most or if not all of the profits you earn on an investment with us is usually going to be treated as long-term capital gains, which is huge. And typically we'll get some depreciation write-offs as well, which is very strong. It's another good thing that we do. And yeah, we like the East Coast because we know the East Coast. I know DC, Maryland, and Virginia. My business partner's down in the Carolinas. So we like the East Coast. We love the Mid Atlantic, mostly in Ohio. And the other reason is because they're fantastic locations as far as job markets and demographics, need for supply of affordable housing. Generation that is working now loves those types of markets that they can go out and work all day, but then at the same time go and have a good time right where they live. Those are all pluses for us, and lower regulatory markets are always strong as well. Conservatively fiscal helps. One of the big markets you're in is in Atlanta, Georgia. It's a fantastic market in general, but one of the big things is that in Atlanta, the movie industry gets a 30% tax credit. So there's a flood of the Tyler Perrys of the world and the Will Smiths that are producing movies. And Walking Dead, one of the biggest shows on TV a couple of years ago, was filmed down in Atlanta. So these are the types of markets we like from a demographic standpoint. But first and foremost, we always want to make sure we have a solid sponsor that has experience, can walk through the process of county requirements and regulations, and puts us in a position to hit the types of returns we want to earn. So in every project we invest in is set up as a single purpose vehicle, meaning that investment is where your money's going. We're not a fund where we're bringing in hundreds of properties under one investment. You're an investment project A, your money's going in project A, and that's where everything's going to happen for that specific investment. We partner and bring those monies in combined with our money because we invest in that project, business partner and I. And together we dovetail that into the project, typically as what's called a limited partner or a co-general partner. And from the yields and the profits we earn from the project level, that will then come back into our business entity set up for that project. And then we have what's called a distribution schedule or a waterfall that will pay out our investors. So our typical return structure is a 12% preferred return. That's typically deferred because if it's land, you're not going to usually yield any liquidated profits for over a few years, but you're going to get that 12% return per year, right? With a catch up, meaning in the years that we go by, you're still getting at 12% accumulating. And then we typically will split our profits anywhere from 60/40 to 70/30 in favor of the investors. So at the end of the day, the investors are getting that 12% return, their money back, and they get that before I get a dime as a business. So if I can't hit that 12%, getting their money back, I don't make anything for a profit for the company for that specific opportunity. And then at that point, with the profit splits, I collect a portion of the profits, but the lion's share of the profits are typically over about 60, 70% is going to go to the investors. And that's going to get them around a 15 to 20% a year. So that's where it gets pretty exciting.
Excellent. Thanks for laying that out for us, John.
Yeah.
Is there anything you'd like to leave our audience with in closing about what you do or anything like that?
Yeah. In general, I would say that it's exciting times that the interest rates are coming down. I think we'll continue to see that. I'm hoping for another 50 basis point reduction by the end of the year. I know a lot of people are a little bit concerned about the election and what happens there, but either way, whoever wins, there's going to be positives coming out of that. And then I think first quarter of next year, we're going to start seeing a lot more action. It's been very quiet just because of the interest rates, not a lot of transactions, not a lot of deals, but I think that's starting to come back, which is great. I love to teach. I love to share. I love to coach. I love to consult. So reach out to me anytime. I know you'll provide that. But if you want to learn more about our company in JID Investments, you can come find out about us anytime. You can jump on our website. We put out a 6-month newsletter every 6 months. We are very transparent. We like to actually spend a lot of time with new investors before we even bring them on. So that way they're comfortable with us. When folks sign up with us, Logan, there's no commitment requirement, subscription fee they got to pay into. They're just part of our network, our family investors, and that allows us to share our projects. So yeah, it's exciting. We've got a couple of unique opportunities coming up. We didn't talk much about this, but opportunity zones is another opportunity for folks to invest in capital gains profits that they don't need to worry about paying taxes on initially. There's definitely a lot of different things that we have available to folks. And yeah, at a minimum, love to meet people, see where we can help them. And if JID Investments or KW United Wealth is an option for them, we're happy to talk to them more about it.
Excellent. All right, John, thanks so much for your time helping us navigate the interesting world of real estate. We'll include links below if you want to get in touch with John and learn about his deals and learn about getting into real estate in general. Thanks so much for your time,
Thanks
John.
for
Greatly
having us.
appreciate it.
Yeah, thanks, Logan. Appreciate it.